This is the Collecting Real Estate Podcast. I'm your host, Stephen Purse, here with your co-host, Bill Hamill.
I'm somewhat more comfortable collecting real estate than I am collecting other stuff.
Welcome to Collecting Real Estate. This is a podcast where we discuss the collections that real estate investors have built and dive into the stories, habits, and decisions that got them to where they are. My name is Stephen Purse, and I'm here with my co-host, Bill Hamill.
Hey, Stephen, how are you today? I'm excited
Good.
about this episode.
Yeah, I'm excited too. We're here with Matt and Dan of New Scotland Development. These guys are local in the Albany area. They're really known for thinking big and doing great things in the real estate investment space. So we're happy to have you here, Matt and Dan.
Thanks, Stephen. Thanks, Bill. Happy to be here.
No problem. Happy to have you guys as guests. We've got to know each other much more over the past 6-7 months. So can't wait to hear what you have to say today.
Awesome. We're excited to share.
So let's get started with a little bit on your background and your history with real estate and real estate investing.
Sure. I'll go first since my history is a little more brief than Dan's here. Jumped into real estate investing full time about 14 months ago now. Before that, I worked in real estate, but as an employee, various analytical, financial roles, doing commercial mortgages, debt and equity placement on mid-market and institutional real estate. Always knew I wanted to do it myself. Was living in Philadelphia at the time and was looking at Albany as a place to relocate to be closer to family with my now wife, and came into contact with Dan here. Actually sent him a mailer trying to find a multifamily property in the area, and he told me to get lost, but he told me to get lost with respect to selling his property, but he inquired about what my goals were and what I was looking to do, and we quickly found out that we had similar interests and a similar mindset as to how we think about deals. So fast forward 14 months, we've acquired 30 apartments in the last year or so, and just ventured into sort of a niche commercial asset type that I'm sure we'll talk more about, but we're looking to acquire lots of deals, diversify our portfolio, raise money, and that's where we're at today. So I'll let Dan jump in a little bit.
Yeah, my history goes back a little further. I've been involved in investing and managing multifamily real estate for about the last decade now. Got into it like most people do, saw it as a good investment opportunity and started buying up some smaller properties, 2 to 4 families type assets, and quickly realized it was something I wanted to pursue on a larger scale, and also realized that these properties and assets take a lot of management to be successful. So decided to dive headfirst and just start a property management company to manage the properties I was acquiring, and also for a third party just to scale that business faster. So started doing some bigger deals and raising capital with friends and family in the $1 million range, like 10 to 15 unit type apartment buildings, or packages of buildings, and I've continued that over the years. Also dove into some pretty major development and construction activity, renovating a old brewery, about 60,000 square feet, into 75 luxury apartments, which was a pretty interesting project, as it had a historic tax credit element and also a micro unit element. So fast forward to today, and we're managing about 250 units, and, active, as Matt said, actively acquiring units on our own and diving into the RV park campground asset class as well. So
A lot to dive into here. One thing, Matt, I know you're really good with sales and especially with direct to seller. I love how you mentioned that you sent Dan a flyer and it didn't work out the way you originally intended, but it still led to something great. And I see that all the time in sales where you make that first contact if you're not afraid to reach out, and it might not lend to what you expect, but something great still comes out of that.
Yeah, I think for anyone out there who's thinking about pulling the trigger on a mailing, I think that's a great aspect to think about, that we all get caught up in it. You look at your metrics, you want a nice response rate, you want to buy the property that you're trying to buy from that mailer. But if you think outside the box a little bit, there's so many potential relationships that you could develop outside of a property transaction from those mailers, because think about it, you're going to be reaching out to active investors. Maybe somebody has, a whole portfolio that they're looking to sell outside of that property, or maybe, maybe you're an agent and they're looking to sell it, or you're a property manager and they're looking for property management. So, we try to take that approach and not try and box anyone in, and have an open mind and listen to what people's needs and wants are, and try to play matchmaker if we can't buy it ourselves.
Yeah, and speaking from the other side of receiving that mailer from Matt, I had always got, just owning the amount of property I owned, I would always get mailers from brokers and agents, and oh, we sold this, we can sell your property, and his was actually a letter regarding more of a personal touch, and that's he didn't identify himself as a broker or an agent, because he wasn't. And so that to me was a bit more intriguing, and typically I wouldn't have responded if it wasn't for that. So a little tip from the other side there.
Such an important skill to have in this industry. And I guess the skill is just being able to reach out and take that leap.
Hey, Matt, question for you, Matt, on what was your intent when you called Dan? And I know you were calling about a property, but what was your intent coming into Albany calling on properties? Were you going to be a one-man operation, or were you waiting for a partner to come along? What was your thought process there?
I am always one that plans for the worst. I think it drives Dan a little bit crazy sometimes, because you might think I'm a little bit of a pessimist, but that's just the way I work. That there's always multiple avenues that you're planning for. So I had written a business plan. I was ready to form an entity to be really a solo investor. But, I had a whole lot of intellectual experience in real estate finance and investments, not much hands-on operational experience. So I always had that in my mind that, hey, if I come across someone that I like and grow to trust and see myself working with, that does have some of those things, they're able to offer those things that I can't currently offer, that would be a very, economical way to advance my career. And that's exactly what happened here. I have the knowledge, I wasn't lacking confidence to go do it by myself, but I saw the opportunity to accelerate things drastically if I found the right partner.
No, awesome. No, you guys seem to work very well together. So no, I'm glad you guys hooked up.
Awesome. Thanks, Bill.
Now, I know you two are both very creative with your investments and in your business in general. And I've heard you speak on that in the past, especially with that one development project. Can you tell us more about that? You mentioned the micro living. It's really interesting stuff.
Yeah. So I actually did that project with a couple of other partners, and prior to Matt coming into the picture. But yeah, really interesting project. I was managing a portfolio of about, I'd say 150 units for an investor group, and mostly in Albany Center Square neighborhood. which is known for kind of having like 6 and 8 units, as Bill knows, in like one brownstone. And they're a lot, because these brownstones just got whacked up over time into small units. And they're old buildings, so they're mid-level apartment rentals. We do what we can. We provide clean, safe living, update stuff, update cosmetics when necessary, but nothing luxury by any means or brand new. And we were managing a 90-unit building, and it had units that were 180 square feet. It was an old hotel, actually. Coincidentally, it was actually first a brewery and then a hotel. And so that's kind of what sparked the idea on the development to try out some of these micro units, because those smaller units were by far the most popular and went the quickest, because it really wasn't about, a lot of renters in Albany are young professionals or graduate students. That's a big population of the renters, especially in that neighborhood. And it really wasn't about the size of their apartment. It was really about having their own space, not having to have a roommate, and having that be an affordable price. So, the interesting thing about micro units is it's a much higher price per square foot. You're looking up in like the $3, or at least in Albany, or the capital region market, you're looking probably in like the high 2, low 3, maybe even mid $3 per square foot. But renters don't look at that. Banks look at that, and they're just looking at the much lower price per apartment. So we were able to offer these brand new luxury apartments that were 250 to 400 square feet for $950 a month to $1,100 a month, whereas most new construction apartments in Albany, 1-bedrooms, studio loft types that are bigger, are going for $1,400, $1,500, $1,600. So that's a big difference when you're a graduate student or young professional on a fixed income, making $50,000 to $75,000 a year.
Do you feel like they're still have that same need for those small apartments in that neighborhood? Has that remained constant?
Yeah, I would agree with that, definitely. I think it's just a natural tendency, especially in our market, whereas you have a lot of out-of-town people going to college, living in 3-4 bedroom student rental type situations, and that gets old really quick. And so people graduate, they get a real job, they're making some money, and they're just looking for their own space, and the price point and location is key as well. So the price point is really the driving factor in my opinion.
Makes sense.
Yeah, I think overall we're going to see that trend continue all around the country. Now, this was a full conversion of a building, right?
Yeah, it was 60,000 square feet, old brewery. It had 3 buildings. Well, it was actually half of the old brewery. The other half, which is a separate deed, was developed in the late 80s into apartments, similar type project. But this was the back end of the brewery, but it had the old stable to the building, which was pretty neat, where the horses lived that transported everything. And then 2 garage warehouse type structures that were added on to the structure later, when they had bottling and storage capacity. So it was a really raw space. The stable was a bit tricky. And on top of that, it was, for the last 50, 60 years, it was an oil and then propane distribution energy company, which presented some environmental challenges. I wouldn't say challenges, just, the due diligence was quite costly. We didn't end up finding, anything of note, which was great. But just another hurdle to get over when you're dealing with tax credits and municipal approvals and zoning and all that stuff. It's just, it makes the project that much more complicated, just something else to worry about. you know.
Can you explain a little bit more about that due diligence and those tax credits and the environmental, all of that?
Yeah, I mean, so, the property was zoned for the commercial business that was there. And to turn it over to a residential zoning, that requires multiple, well, first, it would require approval of the planning board. They want to see your plans, what you're doing with the building, that it makes sense, from like a civil engineering standpoint. We're connected to the city sewer and water, so we need proper, guidelines for that with the building. And then there's the zoning. Luckily, Albany had just passed, some legislation that relaxed the zoning. It was called Rezone Albany, and it kind of relaxed some of the approval process, which was much needed because it was quite antiquated, and kind of created zoning layers rather than this building is this and it needs to be changed. Well, this building was in the middle of a residential neighborhood that developed around it. So why, really the best use for it is residential, and that's how they looked at it, rather than a stringent process of changing that use, the building use and zoning from the commercial industrial to residential. So that was helpful, but still required, many meetings with city officials, many formal meetings, with the Common Council and Planning Board and Zoning Board and Historic Resources Commission. Those are three separate entities we had to deal with the city. I mentioned the environmental due diligence, the historic tax credit due diligence. I won't get too deep into that because it's extremely complicated, but that required approvals from the State Historic Parks Office, which governs it, as well as the federal, National Park Service, who both, participate in facilitating the tax credits for the property. Then we had to go figure out a way to capitalize the tax credits, because they're credits, it's not cash, by syndicating them to a bank, and which required, we were lucky enough to work with Berkshire Bank on both that and the construction financing, which was a great situation, because that gives them a lot of interest in the project. And then finally, we had to go out and find about $2 million to for equity in the project. So we raised that from investors, which was quite challenging because our previous experience had been raising money for active investments at cash flow on day one. And this was just a very difficult project for investors to wrap their head around, with all the complexities I just mentioned. So it's not a lot harder to model out 5 and 10 year cash flow and things like that when you're starting with 60,000 square feet of raw bricks. So
Sounds like you've been raising money for a couple years now. I didn't realize you had to raise such a substantial amount for that project. So is that one of your skill sets, that the areas that you concentrate on most is raising money for that deal and in deals that you have going on now?
yeah, absolutely. I'll let Matt jump in, but high level, that's how we really scale. That's how we look to scale and do bigger projects, is to raise capital, because our funds are limited. There's only 2 of us. We're younger guys. Never won the lottery, never really played it, but so yeah, I mean, that's really been our strategy, is to do bigger deals by raising capital. And Matt, I don't know if you want to jump into some of the nitty gritty on that.
Yeah, I mean, I think since Dan and I got together, we've tried to, we raise money from friends and family, but we've made a concerted effort to bring in new investor blood and be always talking with new investor contacts to try and bring them into our business. because we only have so many friends and family, and they only have so much money. So with an eye for scaling and high volume of deals, our bottleneck is really the capital end. So that's what we've spent really, honestly, the last 2 years building a process and system to advertise and get new people in the door inquiring about opportunities and what our business does, and then, doing presentations for those people and getting them interested.
Now, Matt, before you started investing yourself, you worked on the corporate side of those capital markets and real estate investing. Have you seen that help you raising money for your own business?
Definitely. As a financial analyst, I'd say my main function was creating the offering memorandums and the financial analysis for all sorts of different commercial real estate investments, development deals, apartment deals, shopping centers, office buildings, mobile home parks, what have you. So learning how to pitch different markets, different deals yourself. As a broker, you're pitching the sponsor, but you learn how to pitch a sponsor, which teaches you how to pitch yourself once you're in that seat. So yeah, definitely. I felt very confident from day one to go out, never having done it before, to talk to investors about a deal that I had under contract. So it's it is something that keeps me up at night sometimes, but I think that's a good thing, because we take it very seriously when we take that money from investors. There's a fiduciary duty there that, we're going to do whatever it takes, within the bounds of the law and physics to do what it takes to protect that investment and achieve the returns that we projected for our investors.
Yeah, I think a lot of people in this industry had that entrepreneurial mindset. And so they want to do their own thing from the start, but it's important to emphasize the skills that you can learn from a corporate job like that. And then you can apply those in your own business later.
Yeah, for sure. And I spent the last 2 years of my W-2 employment actually in the software arena, but it was also in the real estate investments arena. It was a company that was one of the first to market with a back office automated platform for real estate syndicators and investment managers. So I got to read probably 1,000 operating agreements from some of the biggest and best operators. Got to see behind the scenes how they raise money, and got to help them automate the process. So, calculating preferred returns and distributions and waterfalls and whatnot. Got a ton of experience doing that over 24 months. So that was kind of the final preparation I think I needed to jump in myself and have confidence with these same things.
No, that's awesome. That certainly is the education needed to walk into what you guys are doing now. It all boils down to finding the deal and raising the money. So now that's great that you guys are both comfortable with the raising side. Do you guys, both find deals? Are you kind of doing a two-head approach, sharing a lot of the duties, or do you guys, separate some stuff out?
Great question. I'd say there's a lot of sharing. Dan comes up with deals because he has a vast network. He has the management company where, clients come to him and say, I'm looking to sell this property. People know him as an investor. So Bill, similar to you, where, I know you're big on the cold outreach too, but you have a lot of people calling you and say, hey, this came across my desk and I thought of you. So let me know what you think. Dan benefits from that. I don't so much benefit from that. I think I'm starting to, because I've reached out to a lot of people, but I'd say I focus more on the cold outreach and reaching out directly to sellers and creating new broker relationships. But Dan always comes up with deals as well because of his network and his reputation.
Awesome.
Being able to find the deal is very important, but there's also the ability to pull the trigger and dive headfirst into it. It sounded like you learned a lot during that process when you were converting that one building, and you have to build that parachute on your way down. It's one of those analogies. I think having that ability to just dive in, even though you're not 100% prepared, is as important as being able to find the deal itself.
Yeah, absolutely. And you know, the big development project I spoke about was a great example of that. You know, you're not going to know everything about anything when you're trying to get into something. So, you know, you can sit back and theorize about, you know, every little aspect of it, or you can just learn by doing, which is, I think, something we excel at, which is probably a good segue into our latest venture of, you know, campgrounds and RV parks. You know, not that it's so different from multifamily apartments, because there's a lot of, you know, similar concepts, but you know, that was something we identified as an asset class, you know, on the rise. And with the multifamily market being pretty competitive nowadays, especially in the capital region market, even in the last year or so, you know, we felt that this was, you know, something to really consider and do what we do and pull the trigger on one. And we just, you know, closed on one on Monday. So
tell us more about that campground experience. What got you involved, and what are your plans in the future?
Great question. I'll take that one. So we originally got into campgrounds initially sort of inadvertently. We had targeted mobile home parks as an asset class that we wanted to get into, and we had some success there and you know, helping transact some deals. We don't own any mobile home parks, but we participated on some deals from our outreach, and we compiled a big list of mobile home park owners, and we did you know, email outreach, cold calling, and it just so happened that a small portion of our list was miscategorized as mobile home parks, but they were really RV parks and campgrounds. So we got a few people at least coming back to us and saying, hey, I am interested in selling, but this is not a mobile home park. And you know, we always try and stay open-minded, and we came across some sophisticated owners that had books ready to go, and they fired them off to us. So we were reviewing financials, and you know, we said, holy crap, look at the cash flow on these things. It's amazing. You know, you're in it, you know, it's a little disappointing because we're already seeing the cap rate compression, and we're seeing a lot of private equity interest in these assets that even 12 months ago wasn't there. I think coronavirus had a lot to do with it, but you know, we kind of dipped our toe in and went in towards some properties, and we were blown away by some of these properties and just the efficient operation of these mainly seasonal properties, where someone comes in and just rents dirt from you to park their RV and camp there. They pay somewhere between $2,000 and $6,000 a season based on the amenities, the location, and the quality of the park. So and it creates pretty efficient cash flow because, one, you don't have massive buildings to maintain. People upkeep their own lots. They pay for their own utilities when they stay for 30 days or longer typically. So creates pretty efficient investment. Taxes are low for these types of properties. Insurance is low in comparison to a similar value commercial property or apartment building. So you know, those were all things that were super attractive, but also just kind of more qualitatively, it seemed like it was just an interesting, fun thing to get into that was a major change of pace from apartments. And I would probably say the eviction moratorium has something to do with it, because we were frustrated with the way things were going, especially in a market in a city like Albany, where, you know, we feel that property owners are losing their rights, which is a whole nother topic. But right now on a campground, we don't have residents, we don't have tenants, we have people that are leasing dirt in a hospitality property. We have a whole statute written for us that says we don't, you know, these are not tenants, we don't have to evict. So it was very appealing in that sense as well. So a lot of different reasons that we were interested in this asset class. And then when we reached out to these owners, we were pleasantly surprised. It was a very different course of events that took place with each seller when you compare it to apartment owners or commercial real estate owners outside of campgrounds. You know, people are very welcoming. They're humble. They don't think they're necessarily sitting on a pile of gold with their property. So they're reasonable. They're, you know, usually put decades into the property. They've managed it themselves, lived on site. So it's just a whole different process to purchase a campground, in our opinion, in our experience, versus another type of commercial real estate.
We're up here in upstate New York, so there is access to campgrounds in our area, but they're seasonal because we're in upstate New York and no one wants to be camping in a couple feet of snow. Has that affected your search process? I'm curious, does the seasonal nature affect the cash flow, one, and two, have you looked at warmer climates that don't have the seasonal nature, and do they have different cash flows because of that?
Definitely. And I'd call it sort of a double-edged sword, but based on our research over the last, 18 months looking at these properties, we are actually in favor of the seasonal model. And it's a conversation that we have when we talk to potential investors that are located in different regions in the country, because sometimes their reaction is, oh, well, that doesn't sound good. I'd rather invest in a property that has year-round cash flow. So it's an objection that we get a lot from people that are not either from this area or familiar with seasonal campgrounds. But back to the seasonal renter, that's a dynamic that's not in play with year-round properties. So the other aspect that we didn't mention here is with the seasonal renter, they're going to pay a deposit, usually a full year in advance, and then another deposit at some point in the off season, and then pay their balance due in full before they show up. So there is absolutely no aspect of collections or bad debt or anything like that with these businesses the way we want to run them. And then if you juxtapose that to a year-round property, say an RV park in Florida, that really looks more like a mobile home park. And it might even be kind of like almost like a motel where it's an extended stay, because you have people paying by the week and paying as they go. And I think you cross the kind of the gray area of what is a residential tenancy when you have people living there year round. So I do believe that evictions would probably be more of a factor, collections more of a factor. So that's not that it's something we can't wrap our heads around, and we do plan on expanding geographically, but we're definitely comfortable with the seasonal model. The other end of that is the utilities. They pay their own utilities when they're seasonal, so creates a reimbursement of operating expenses that creates more cash flow in the end.
At the end of the day, that's what it is. It's you're analyzing these investments based on that NOI. So seasonal or not, you're left with that annual return that you have to be comfortable with. But Dan, when looking at that style investment in relation to that warehouse rebuild, I've been there where you're doing those tedious day-to-day, more dirty type project. do you want to get into something like that down the road, or are you just looking to have that more simplified investment like the RV park?
Yeah, I mean, I think for us, it comes down to, and that's a really good question. I think for us, it comes down to cap rates and cash on cash return. And, the path forward to, the path between day one and achieving what we're projecting. And when we look at an RV park campground model, we're looking more in like the 10 and 11 cap rate range, which is you're never going to find in an apartment building, multifamily, unless there's some type of value add opportunity, but that's a whole different beast. And, talking about the complexity of new construction and where construction costs are going and the financing for it, it definitely all plays a factor into it. I wouldn't say we're necessarily erring towards more simple. I think it's the cap rate and cash on cash return factor that drives us towards a specific asset class or, investment in general.
Yeah, and I think an important aspect of these properties that we didn't mention is most campgrounds and RV parks come with a significant portion of raw land, and there's just incredible demand for campsites everywhere. So there's always kind of an inherent built-in value add play with these. And with this property that we just purchased, it's just under 26 acres in the Catskill Mountains. And on the in-place cash flow, we purchased it at just under a 12 cap. So we could operate it as is and make plenty of cash flow. But this is a very rustic campground that there's plenty of room to develop it, add value in numerous different ways. And we're actually going to be incorporating a tiny home component. So, we view this type of investment as the best of both worlds. It's cash flow from day one, but it's also a development opportunity. And, to kind of piggyback on Dan's answer there, Dan has built great experience in the development realm, specifically in the niche of historic tax credits and adaptive reuse. So we are always on the hunt for those deals. But, I think first and foremost, we're cash flow guys. So if we could just fill all our time and bandwidth with nice cash flowing deals, we probably wouldn't touch development deals unless it was such a home run where we could step into a property for nothing and, just create tons of value that we can realize quickly. There's so much risk in development, and I probably wouldn't touch it if I didn't have Dan here with tons of great experience, because I'm a cash flow guy. I don't want to think about, cash flows going out to the tune of millions of dollars to maybe turn around some cash flow 3 years from now. That's not that I'm scared of it, but if I can line up a deal that's going to have serious cash flow day one, I'm always going to pick that deal.
Join the club. Yeah, I'm with you there.
I think it's also a testament to our strategy right now and raising capital. We need to be able to provide our investors an attractive return and then have something left over for us at the end of the day, or why do it? So we need to find, 9, 10, and 11 caps in order to achieve that. Down the road, if you have a couple $1 million in the bank and you want to take a risk and for a couple $100,000 of due diligence, the old saying, don't place a bet that you're not just willing to lose. Well, it kind of applies there, especially in development and the risk associated with some of these projects. So, it's really, I think at this point, more of a matter of perspective. When I did, we talked about diving head first. When I did the big project, I didn't really understand what I was fully getting into, and the amount of money I was going to have to shell out. And there was some long nights and lack of sleep that were associated with that. So it was good learning experience. And I think again, it's more of a matter of perspective today than anything.
Yeah,
What's the
definitely.
saying?
Go ahead, Steve. Sorry.
He's saying his cash flow is king. You definitely have me sold on seasonal RV parks. I'm
Hey,
curious.
we're going to buy one down the street.
Yeah,
We'll be
we
seeking
may have another one
investment. I'll
coming.
send you the package.
Now, I've gone camping a couple times, and it seems like there's always something that goes on that wasn't expected. There's a couple of characters out there in the park. You've been doing this for 18 months. Do you have any funny stories from your experience?
This campground is a special property. As I said, it's just under 26 acres in the Catskill Mountains, in the southwest side of the Catskills, which is, we're a couple miles downstream from the birthplace of American fly fishing. So we have nature enthusiasts, fishing enthusiasts. It's not a party campground. It's a quiet campground where people come to enjoy beautiful creek front campsites. We have 48 RV sites, mostly filled with seasonal renters that are just looking for a beautiful place to go unplug. So it's a very quiet place, very tranquil and rustic. So, not that we don't like the other kind of end of the spectrum of RV parks where you might have 200 sites and it's a little bit more of a party kind of summer atmosphere, because those have tremendous cash flow as well. So that's honestly really what we set out to find, was your more institutional type RV park. And then we stumbled across this property, and we honestly tried to find a dozen reasons not to buy it. And we probably came up with them, but every time we came back and visited the property, it was a digestible price point for our entry into the asset class. Purchased the property for under $1 million. And we did seller financing on it, favorable terms for us. And it was just an easy bite-sized deal to step into. And it's a place that, I'm looking forward to visiting for years to come myself. And I'm sure Dan is too. Dan's more of an angler than I am, but I'll probably get into it.
Oh yeah. And I think part of just the overall experience of looking and vetting for campgrounds provided a lot of humor, mostly from the fact that, we, not that we're cocky or overconfident or everything, but, we like to think we're pretty experienced and we know what we're doing. And some of the intricacies of the campground world definitely proved that wrong, and was almost a little embarrassing at points. Whereas, we were discussing the equipment of the campground, and, we got the equipment list from the owner, and there was a mule on there. And I said, Matt, I didn't see any farm animals on the property, did you? And, I'm not well versed in things like that, and didn't realize that, it's like a little Kubota tractor type, that was, the guy was taking it with him. He had a nice one. And so he's taking his mule with him. And I'm like, yeah, he can take the mule with him. We don't want to deal with that, So that was a little embarrassing. I actually said it on a call with the seller, and I don't know if they caught it, but that was a little embarrassing. We also, learned what a honey wagon was. And, I remember distinctly driving, we had both heard sellers and brokers that we were talking to talk about it. And I remember driving out, I think we were looking at something in like Massachusetts or Connecticut. And, these trips have provided some long days in the car, when we're in the car for maybe 4 or 5 hours to see a property for 1 to 2 hours. And Matt just looks over and he's like, so do you know what a honey wagon is? Because we kept hearing it, and he had clearly looked it up. And I'm like, I had not looked it up. And I said, I was a little more well-versed on this one. I said, I'm guessing it has to do with something of the sewage of the park. And he goes, yes. essentially a honey wagon is a trailer type situation that if the RV sites aren't hooked up to a septic system, the owner can, or the manager can go around and pump out the RVs for, to service essentially, if the RVs aren't hooked up to a septic system, which in this case, the campground we spot is not. So we've had a lot of jokes about who's gonna draw the short straw and have to drive the honey wagon.
Now we're talking the fun part about properties.
Yeah.
I think the first time I saw a honey wagon, it was an income line item because you charge the campers for the service, and I honestly thought it was like a food truck or something. I was like, the honey wagon, maybe like kids go buy like ice cream from it or something. The exact opposite.
That's for sure.
That's good stuff. I love the mule part, because how would you know any different? They said mule.
Well, in Dan's
Right,
defense,
I'm, pretty experienced guy in real estate for 10 years and making an ass out of myself, no pun intended.
in Dan's defense, the first property we looked at, I think they had a donkey. It wasn't on site, but there was a pen for a donkey. So I think that's why he was thinking every campground came with some sort of farm animal.
We're always learning.
I think my first time I went to Home Depot to ask for paint, and I told him I wanted white paint, and he says, "Okay, let's go with this eggshell." And I said, "No, not eggshell. I want white."
Nice.
So we've been doing this for close to an hour now. I don't want to keep you all day. We have a conclusion to the episode prepared going forward. Bill, do you want to take that away?
Yeah, absolutely. Thanks, Stephen. They say that you have to have 3 of something to officially have a collection. So here's our collection of wrap-up questions for you two. I'll ask one at a time. Let's start with Matt. What's one real estate goal you have for the next year?
By July 31st, 2022, I want to acquire $10 million in investment properties.
Awesome. That's a great goal. What's one personal goal for the next year?
A personal goal for the next year would be to sell. I'm selling the first apartment building I bought. So I want to get that done. That should be done in the next few months. I'll go with that one.
Excellent. What's something that Stephen and I, or any of the listeners, can do to help you at this point moving forward?
I think exposure is our best friend at this point. So, I have a vision of one day maybe we have a Hamel New Scotland diversified real estate fund where Hamel Real Estate's taking the stabilized apartment buildings, and maybe we have a section of that for some development deals and some RV parks to get the cash flow going. Just an idea for you though, Bill.
I love that, Matt. I love that. We'll certainly continue to have that discussion, and let's brand together. I think that's what it comes down to. So Dan, same thing. What's one real estate goal for you for the next year?
Yeah, I mean, I'm with Matt on the 10 million. That's kind of, we set our sights on $1 billion in 10 years. So, if we can knock out some 7-figure deals, or 8-figure deals, actually. My morning coffee has not kicked in. I think that's a good path to the billion we're trying to get to.
Oh, I love that. I love that. What's one personal goal for you for the next year?
Yeah, I mean, I think, for me, not so much personal, but I guess personally business related. And I'm sure Matt will, I'd take Matt's advisement under for this, but I think just maybe get into a business that isn't real estate. I don't know, it's something I've always thought about. My background is finance and accounting from my undergraduate, and I'd like to explore some, venture capital type situations. You know, so that's something personally that I'd like to explore, but also obviously, our business is set up to excel at that. So.
Excellent, excellent. So same question for you is, how can Stephen and I or the listeners help you out?
Yeah, I mean, I like Matt's answer, but I'd say if you have any deals that aren't a good fit for you, send them our way.
Awesome. No, great answer. Great answer. We'll certainly keep this discussion going. We love, dealing with you guys. You've been great friends over the last 6 months. So looking forward to the future.
Thanks so much, Bill and Stephen. Great time chatting, talking shop today.
Awesome.
Thanks, guys.
All right. We'll talk to you guys soon.
Talk to you soon. Have a good one.
All right. Bye-bye.